Hello guys, Shell here from Bavelchi FX, and today we'll be looking at the moving averages. The moving averages is a widely used tool in the world of technical analysis. Moving averages help smoothing out price action by filtering out the noise, that is the random price fluctuations or fake outs. So I'm going to be showing you how to set this up, how to set the moving averages up on your TradingView platform, and also show you how we use them to execute trades in line with other technical tools like the trend lines, the counter trend lines, Fibonacci's, and a whole lot of them. So what you want to look for is this icon here: indicators, fundamentals, economy, and add-ons. You click on it, and on the search tab you search for moving average. Just type moving average. So what you want to click on is the moving average exponential and the moving average, just those two. Okay, then you close the search tab, and here on the EMA we use is the 8 EMA, and for the moving average we use the 18 moving average and the 8 exponential moving average. So you go to this wheel icon, that's the format, you click on it, and on inputs punch in 8, and on the style I like my 8 EMA to be blue. You can choose whatever color suits you, and that's all. Don't touch source, don't touch offsets. So okay, and for the moving average itself, we want to punch in length, we want to punch in 18, and the style red. You can adjust the thickness if you want. If you can't see it properly, you can adjust the thickness here with this. You can see how the red is changing in size. You can adjust the to any thickness you want. So that's that for setting up the moving average. So basically what we want to be doing with the moving average is to execute trades upon the cross. Now bear this in mind that the 8 exponential moving average, which is the blue, has more weight than the 18. So I personally pay more attention to the 8 EMA than to the 18. But for you that are less experienced with this, you can combine the two for your trading. So the ideology behind this is to execute trades upon the cross of the moving average. If the 8 moving average crosses above the 18, it signals a bullish run, and if it crosses below the 18, which is the 8 or the red moving average, it is a bearish run. So let me show you some examples here. This is the EUR/USD for H4 time frame. So we have one here, and we have one. Let me change this real quick. So this is basically what the moving averages is all about: executing trades upon the cross of the 8 and the 18. But we don't just take these trades solely based off of the moving average cross. We have to use other technical factors like the trend lines for more high probability trade setups. So if I should add my trend, in this case this is a counter trend line, this is not a trend line. A trend line has more significance. I'll be taking you on counter trend line shortly after this video, but that's not what we are here to talk about. I'm talking about the moving averages right now. So if I were to enter the trade upon the break and close of this bullish candle here, that is, I have one confirmation that price is actually in a going to enter a bullish trend as the moving averages crossed, as the 8 crossed above the 18, and then I have my counter trend line drawn. So the break and close of this breakout candle here, I would have entered this trade possibly from here, which is 162 pips. Let me draw that out again. That's 163 pips. That's 163 pip trade. So that is how we combine the moving average with technical tools like the trend lines, the counter trend lines, Fibonacci's, and all of that. So going to the bearish example, we can see the bearish cross right here. The 8 crosses below the 18, and you can see how the moving averages have helped filter, price action. So these are things you have to look out for when executing a trade setup. And if you look closely, if I take my Fibonacci tool, swing low to swing high, what do we have? We have a 38.2 retracement level and price dropped. So that's why I said it's always proper or better to execute trades with other technical tools for confluences. What do I mean by confluences? These are various things that you like a checklist of various things you put in order to take that will give you more insight and be like, okay, this is a high probability trade setup that is presenting itself before me. So make sure to combine the technical tools. I'm sure the Fibonacci have been covered in previous videos, so go back and watch them and see how to apply them on your chart. So you can see that the moving averages have helped filter this trade right here at this point right here. Came, broke, and it didn't quite close above the 18 in this scenario. So this is a bearish setup right here. Cross, price dropped. If you want to be conservative, your counter trend line, you can see how price came, broke, and retested the trend line, retested the moving averages, and then dropped. But that will give you a less risks to reward. The risks will be higher than the reward because you obviously have to move your stop. Your stop has to be big to accommodate the fall in price. So there are basically 3 scenarios of the moving averages. I'll have to look through my charts to spot these scenarios, and I would send them to you all in the form of probably a PDF or a document file. So what would I like to train another thing. The moving average cross has significance. The significance on the monthly is different from the significance of the weekly. So the monthly cross is greater than the weekly cross, the weekly cross is greater than the daily cross is greater than the 4-hour cross, and so on and so forth. So whenever you are executing a trade, you make sure that at least, if not 80% of the time, your weekly, if you have a weekly cross, like here on the weekly we just had a cross on the weekly. Let me scroll into that. As you can see, we just had a cross on the weekly. We just had a cross on the weekly right here. So this is very significant, and you can see the long bullish run that has happened after this cross. Price came, filtered it. You can see the candlestick pattern that happened here. That's why it is good to execute trades with other technical tools. Like for instance, this is a structure. I can see a very nice support area here. I know a lot of people, when after seeing this bearish candle, they'll be like, okay, we're in a bullish or we're in a bearish market sentiment. But if you look at this support area here, this support area has held firm. Price, this was the false breakout of this area. Price came back, we tested it, came back, we tested the moving averages and gave us this nice candlestick pattern. I think this is a morning star. So, and then price shot up. What do we have here again? We have this moving average cross here. So these are all confluences, these are all factors that we have to take into consideration before taking a trade. Okay, so moving forward, the moving averages also act as dynamic areas of support and resistance. What do I mean by dynamic areas of support and resistance? Plus support and resistance that are on the move. You know the moving average is the lagging indicator, so these are support areas that are dynamic. You can see this nice support area that was here, gave us a 3-pin pattern here. Price actually broke the 8 EMA but couldn't quite close below the 18, so that acts as a dynamic area of support and resistance. I also filtered out this trade. A lot of people after seeing this will be like, okay, we have this shooting star pattern, okay, we have this bearish candle, and we also have this long bearish candle, so we're in a downtrend. No, if you take your Fibonacci, swing low, so swing high. What do we have? We have our A leg, our B leg, and our C leg. So D leg again, we have, okay, this is not even the complete Fibonacci. Let me take that out. So what do we have here? You see that the price could not actually close below the 78.6. This is a hidden area of support and resistance, 78.6. I'm sure this has been covered in the previous videos, the Fibonacci videos. So price is still pretty much in an uptrend. So you have to have other technical factors to add as confluences before you take any trade. So as promised, I hope this video has been of use to you. I will be sending in the 3 scenarios, which the moving averages, 3 scenarios that happen for or with the moving averages. I'm sending them to you later on today. So I hope this video has helped you to understand moving averages. If you don't understand anything, you can reach us on the support group. I will be there to answer all your questions. So have a nice day. On to the next one.